Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
I'm Carol Master along with Tim Stanovic. Let's get to it with Bloomberg News equities reporter Alexandra Semenova. Alex, it's an interesting market day. I am curious where you're going to start here.
Yeah, well, Tim just mentioned Bitcoin, so we have to start with MicroStrategy. It used to be the case that holding Bitcoin was an easy way for companies to make big money very fast. And now with Bitcoin down about 45% from its highs in October, all of those same companies are really feeling the hit here. MicroStrategy, or rather Strategy, after the rebrand being a part of it, it is the original digital asset treasury company. It has weathered severe sell-offs anytime that Bitcoin has. And right now, it's really feeling the brunt of this. It used to have a premium of more than double its underlying Bitcoin holdings. Now it trades at just a 9% premium, and it's also expected to report results after the close today. And the expectation is that it will report a multi-billion-dollar loss on the value of its Bitcoin, given the rout that we've seen. Looking at the stock, it's down 15% today alone, down nearly 30% year to date. So very brutal for Michael's company.
A real test of this model that really inspired so many other companies to go out and hoard different crypto assets, whether we're talking about Bitcoin or Ether, this idea of a DAT, a digital asset treasury. So yeah.
It's become like a direct proxy of Bitcoin's performance.
Yeah, I feel like there was a period too where like almost every company was like, wait, or we started to have these discussions about should they have something in terms of crypto or Bitcoin on their balance sheet. I just want to point out Strategy at its high back in 2024 was almost a $474 a share stock, and now it's at $109 and change.
Yeah, so unbelievable.
Quite a drop. Okay. Number two is Alphabet. This one is an interesting one because even though the stock is lower today, a lot of people were disappointed with that CapEx number. There's actually a lot for investors to be excited about in this report. So the company did top up projections for quarterly revenue, and specifically in that Google Cloud unit, its revenue jumped 48% to a whopping $17.7 billion. That handily topped Wall Street estimates of about $16.2 billion. So really solid number there. Also, Gemini, its AI model, it is rapidly reaching new users. The thing that disappointed investors is that CapEx number. It will reach as much as $185 billion, which compares to about $120 billion that Wall Street analysts were expecting. So that is a lot more. And for 2026, that CapEx spending will total more than what it spent in the prior 3 years combined. So a lot of money. But at the same time, CEO Sundar Pichai says that these costs are necessary and they're actually seeing their business monetize these AI investments. Obviously, he's a little bit biased, but we also had Jefferies analysts say the same thing, that AI is actually paying off for Google.
I mean, it's pretty amazing to see the growth in the active Gemini users, going just increasing so much just over last quarter.
Right.
And that's for the standalone Gemini app, not just for like anyone using its AI features in a different platform, like in search or in Gmail or something.
Yeah, absolutely. And also worth noting that the bar was just incredibly high into these big tech companies.
I think it's also interesting. I mean, this stock bounced around so much in the aftermarket when it reported. It's been down as much as 8% or almost 8% today. So it has really come off of those lows today in a big way. So it's interesting as investors make their way. All right, from Alphabet to where?
Estee Lauder, which is taking a very, very big hit today, actually seeing its worst decline on record. It is down 21% right now. This is after, even as the company did boost its outlook, it just wasn't enough for investors who were expecting more from their turnaround effort under their new CEO. The company narrowly beat Wall Street's expectations for revenue and adjusted earnings per share in its most recent quarters. They actually reported good growth in skincare products, so people were buying La Mer and The Ordinary. They were also buying up a lot of their fragrances, including Tom Ford's perfumes and Le Labo, which, by the way, is just a testament of the strength of the consumer because Tom Ford perfumes are something like $300.
No, it's expensive.
But that segment did well, and the company also narrowed its outlook range for the net revenue growth. And for the period ending in June, it now forecasts growth of 3% to 5%.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.